Over the last 2 years, I've generated over $1 million trading. And what got me here isn't what most traders think. It was less about the strategy and more about having the right game plan and consistently following it. In this video, I'm going to break down the exact game plan. And at the end, I'll show you exactly what the results would look like for you if you were to follow this entire plan. If this is one of the first times you're seeing me in my videos, drop me a like, helps grow, support the channel. If you like what you saw in this video, comment something that you liked. And if you found value, subscribe. All right, let's dive in. This is going to be the full training of how I got to over $1 million in the past 2 years. So to make this training pretty straight to the point and not hours long, I went ahead, built out this workflow here and grabbed the pieces of information that you need to see. So that way we can just get right into the point. So first and foremost, everybody wants to know proof. Is this real? So let's dive into that. You have the 1099 stubs here. You have my name, payouts, right? And then you have this payout here and then a payout there. Cool. There's a proof. You can pause it if you need to. So let's move on to the game plan, right? So we're going to go on to different things we're going to talk about. We're going to talk about the game plan. We're going to talk about risk management overview. We're going to talk about the strategy. And then, like I said, at the very end, we're going to talk about the end results, right? And then next steps. So let's go to the very top here. We're going to talk about the game plan. This is one of the most important pieces that you need to know in order to make that kind of money. You need to map it out beforehand, right? So if we do that, we have to understand what are we going to be picking first? Cash accounts or prop firm accounts? And we have to understand both. So let's talk about the cash account first. Only do a cash account if you have $25,000 to start with. For this particular model, for this particular plan, to get to $1 million in the next 2 years, only do a cash account if you have $25,000 to invest into a live trading account. That is the only way you would do this on a cash account. Repeat myself, on a cash account, only do this if you have $25,000 to put into a starting trading account that is live, cash account with a broker that you trust and you are feeling that is reliable. If you do not have this, then we are going to go the prop firm route, right? So let's look at this. Prop firm account. You have to understand this is a product, right? You're buying something that prop firms are wanting you to do and potentially fail, right? So you have to want to find a prop firm that has good drawdown rules, no consistency rules, and a flexible minimum trading day rules. What does that mean? Essentially, some prop firms will have consistency rules where you need to hit a certain amount of consistency of winning trades, and then you can withdraw. Some of them don't have that and they have minimum trading days where you have to have a minimum trading days of two, three, four, five of a certain percentage gained. Find the one that does has no what's it called? No consistency rules, right? No. And good flexible trading rules. Reason being is because it's going to make your life a lot easier. It's a lot easier to gain. Let's say usually it's a 0.5% gain on like 3 days versus having a consistency rule of 20 or 35%, right? And you're going to want good drawdown rules because if you can have a drawdown rule of 3% daily and then 5% max drawdown rule, it gives you more flexibility to trade with, right? So let's continue talking about that because that's actually here in the game plan. Now, following that, you want to establish time sessions. So I personally went with the New York Open and the Asian market, right? The reason being it has the most volume. And if you're seeing what this arrow is literally just talking about the cash account. So once you start your 5K cash account, and then you come into here. If you are not doing that, you're going to pick a prop firm that is good with good rules, right? Now, here, this is going to be important for you. I went with New York Open and the Asian market. I went with both of them, right? Reason being, most amount of volume. Now you have to figure out which sessions you're going to trade based on your life, your schedule, and what's going to be best suited for you. This is literally step one. You need to not fit, what's it called? Trading is not supposed to be something you fit into and you obsess about it. Trading has to fit into your life. You have to find a section, a time in your day where if you put trading in here, it's not going to mess up your whole entire life, right? So for me, it was the New York Open and the Asian market. Again, reason being most amount of volume, which I'll explain here in a second. What I was trading was US 30 in the NASDAQ during the New York and then gold during the Asian market. So for me, the US 30, the Dow Jones, and the NASDAQ had the most amount of volume during the New York Open. but gold had good volume during the Asian market. The reason why I didn't trade gold in the morning is because there's more volatility in these two instruments versus gold, right? And obviously the US 30 and the NASDAQ don't have as much volume as gold during Asian. So I went with gold for the Asian markets. And then you also have to pick what you want to do. So for example, I this is forex. I'm just going to do FX and futures because you can trade these on both systems, right? So you need to figure out which one is going to be for you. Is it going to be stocks? Is it going to be options? Is it going to be only forex? Is it going to be only futures? Pick the category into which you want to trade that you feel most familiar with. This is literally a copy and paste training that you can apply to any market. You can even do it into the crypto market if you like to, but you just need to identify the time sessions and the instruments you'll be trading. I went with the US 30, the NASDAQ, and gold as I literally just mentioned. Now, following this, we need to have risk parameters. We have to have rules around it. And we must understand the difference between a cash account and prop firm accounts, right? So let's talk about the cash account. Staying on a fixed risk throughout, letting compound kick in and not withdrawing until you have reached your goal. Mindset is long-term thinking. So if you have a 25K account and if you're consistently cashing 5 grand a month, you're gonna maybe want to withdraw that. No, keep it in there. It's a long-term process. It's a long-term gain. You want to let the compound effect kick in. And once the compound effect kicks in, that means your account's going to grow substantially and you can start withdrawing whenever you feel like it. Now, prop firms, it's a lot different, right? Prop firms is all about passing the eval and then surviving the funded phase to get your first payout. So what does that mean? Our risk management will be different and changing depending on where we are at in the process of this account, which will be explained later on during the risk management side. So continue watching because I'll explain this more in detail during the risk management section. And you can see here, this just automatically goes to strategy. Pick one strategy and stick to it. Don't hop to 10 to 50, 20 different concepts. Pick one strategy, stick to it, master it, and build on top of it. Don't jump from strategy to strategy. That's going to cost you so much time and money, and it's going to stress you out. Pick one strategy, stick to it, and follow it. I will later show you the strategy that I used that gives me 79 to 81% win rate and a good RR multiple there, right? So let me just kind of go to the next one here. Let me go zoom out and here we are. So we just went over the game plan. Following that, we're going to go over risk management overview, right? This is very, very important. So we have prop firms up here, cash account down here. So I'm going to do the cash account first because it's the easiest. Cash account, right, is one set of risk rules that never changes, and you're letting the compound effect take into place. So, what do those risk parameters look like? You're going to want to risk on a cash account 2% per trade maximum. You can do less, right? You can do 1% if you're not confident, but you're always going to want to stick to 2% per trade maximum. Never go over that because if you go over that, you have the high probability of blowing the account if you hit a losing streak. So you want to take into consideration that there will be moments and days and weeks where you hit a losing period where you're just losing and for whatever reason you just can't win. That's going to happen, right? It's part of the game. It's part of the way the markets move. So if you don't feel confident in something on a setup, then just reduce the risk to 1%. But ideally, you want to stick around 2% per trade, right? And once you've established that and you're letting the compound effect kick in, you need to understand this is a long-term investment, right? This is not something that you're going to get rich overnight. Yes, trading is something that you can do actively every single day. And yes, you can make a lot of money in a short period of time, but our goal is to get to that big number, the 1M, right? So to make that happen, what we need to do is have the mindset this is a long-term investment. So what does that look like? On a 25K account, like I spoke about risking 2%, that's $500 risked. On a one-to-one, that's $500 gained. But if you let the compound kick in and at 40K, that now is $800 risked, $800 gained on a one-to-one. And then what happens if you let it go to 80? That's basically double at that point, right? It's probably 1200 at that point per risk and gained. Let the compound effect kick in. Because if you were to actually profit, let's say you trade 4 times out of the week, right? And let's say you have a killer month, right? You're just closing at a one-to-one and you're risking $1,200, right? That's $4,000, 800 per week times four. That's almost $20,000 for the month, right? Just letting the compound effect kick in, letting it kick in, letting it kick in, letting it kick in, and not withdrawing, but just letting the compound effects continuously grow your account. It's a long-term investment, right? And here's the thing. Since it's long term, you want to grow this correctly, you're always going to go break even stop loss at a 1-to-1 and close half of your position and let the rest ride to a 1-to-2 and then close full there. Do not chase home runs. What does the math look like on that? So if we risk 2%, right? And then we are at a 1-to-1, you are now officially securing 1%, which is guaranteed. You've now grown your account 1% more than what it was. But since you closed half, you have 1% running still. That means at a 1-to-2, you will now be closing here at 2%, which gives you a total of what? 3% gain for the day. How did I come to that? So if you risked, let's say $100, right? And then at a 1-to-1, you closed half of that, which is $50, right? Which means you have $50 still running because you closed half of 2%, right? Which we're doing the example of 100. You closed half of 100, so you still have 50 left to let it run. That could run if it goes to 1-to-2 from your original position, that could go to $100. So that means if you do close at that, you're now gaining $150 on your account. That's how the math works on that. Do not chase home runs. Do not look for 1-to-4s and so on. Do not do that. Close at something that's consistent and predictable. For example, if you're going to start running, are you going to go run a freaking marathon right away? No. You're going to start running maybe 1 mile, half a mile consistently until you can up it to 1 mile or 1 mile and a half and so on and so on. You want to do things in increments so that way you're not setting yourself up for failure. You want to set yourself up to have positive wins, right? So, for example, if anyone's watching this likes boxing, if you've never boxed a day in your life, you're going to learn how to start fighting to start with and then get into sparring. Start with 1 round, go with that for a couple weeks, add a second round, go with that for a couple weeks, and then continue adding more rounds in your sparring. Same exact concept here, right? You want to keep building upon your wins, but you're not chasing home runs. If you're consistently bagging a 1-to-2 every single trade, then yeah, maybe aim for a 1-to-3 and see what happens, right? But don't just go for a 1-to-3 right away because you're going to lose so much money, right? So do not chase home runs, close full at a 1-to-2, right? And then consistently do that. And each month you will gain 20% or more. And in about 4 to 6 months, there'll be 100% gain on the account. And then you want to keep scaling that account until you reach the size you feel you can withdraw from your account and continuing to let it scale. So for example, if you took 25,000, turn it to 100 grand, and now you're making 20% on that, that's 20,000. You can take 10, leave 10 in there, right? Now that's going to continuously grow your account and you can still withdraw to live off of it, right? Which is cool at that point. And then here's the potential risk by doing this. I want you guys to know this sounds amazing right now. Sounds freaking awesome. Sounds cool, but what's the potential downfall to this? You will get greedy and you will get impatient. But if you can overcome those two things, you'll be very happy that you did. Why will I say that you get greedy? Because you're watching your account grow slowly. You're not getting the amount of money you want right away. It's going to be impatient because it's going to be a 2-year journey. This is a 2-year journey, not a 1 year, not 5 months, not any of that BS that you see on Instagram that these guru traders are telling you. This is the real outcome of this. 2 years of consistency will change the trajectory of your life if you can follow this process. And I know you guys are already, if you're watching to this point already and you're already liking what you're seeing, drop a comment below what you're liking so far and subscribe to the channel because I already know at this point you're already saying to yourself, wow, this guy is giving me real value. This guy's actually giving me the things that I need to hear, not what I want to hear, not the things that are going to hype me up. Because the potential risk to this is you will get greedy and you will be impatient because it's going too slow. It's a 2-year journey, 2-year process, right? So you have to treat it as such. on a cash account. And that's the potential risk that you could blow your account if you can't overcome the greed and impatient and being impatient. But let's say again, for people that don't have the 25,000 that we spoke about that you need to have, then we're going to talk about the prop firm round, right? The prop firm path. Risks evolves as you go through the different phases of the prop firms, meaning like percentage risk of what you're risking per trade, et cetera, et cetera. Think of it like as a video game, right? You start off with like the shittiest and crappiest HP that you possibly could have. If you don't know what HP is, it's health points, right? And then as you progress with the levels, you start to increase your lifespan, right? Same exact thing here. That's basically what you're doing. Because why? Because you're buying a product. You're not buying actual money. You're buying an actual product like a phone or something to consume, right? I have a juice box here. I'm drinking juice because I'm consuming it. It's a product. That's what you're buying is a product, and you have to treat it as such, right? So on an eval account, an evaluation account, the whole purpose is to pass the challenge without blowing the account. So that means you must build a small enough buffer where if you risk 2% on trade, it won't blow your account balance. So what does that mean? So that means if you do everything I'm going to be basing it off of is a 100K eval account. So if you can have a 100K eval account, right? And you're able to grow that by 2%. And again, if you remember previously, you have a good system, you have a good balance, a good what's called drawdown rules, then that means your daily drawdown limit's 3%. So now at this point, if you risk a full 2%, one or two things is going to happen. One, you're going to lose and then go back to your original balance. I'm just going to do L. Or you can win, and then guess what? You're up 2%. You'll be up 4% on the count. Majority of the people need about 8% to pass it. Well, guess what? You are now 50% of the way there. And if you take one more trade, you're 75% of the way there. And if you take the last one and you win, you passed it, right? But if you lose, you're back down to the original balance, right? Which we already spoke about. And all you got to do is just do that buffer again and then give it a shot again. Because the whole purpose of it is to pass the eval, but also not blow the account. So you need a buffer. And once you get that buffer at 2%, then you can go ahead and risk 2%. Because if you lose, guess what? You're back to where you started from. If you win, guess what? You have now enough buffer to lose two trades to go back to the original place that you're at. Now, if you're like, well, I don't want to risk a full 2%, then risk a full percent at this point, right? And that's it. It's just going to take you maybe a slight bit longer to pass the eval, but it's up to you what you want to do. Again, 2 year game plan here, 2 years. Doesn't have to be done tomorrow, right? So do what's going to be most comfortable for you. Now, let's say you do lose and you do go back to the original balance here. You're just going to do it all over again, right? Get that 2% buffer. You're going to either lose or you're going to win. And if you win, guess what? You're about 50% of the way there, and you just need two more wins, and that's it. Two more wins in hindsight of trading is not hard to get. It could literally be in like one day, depending on how you're trading, right? So just keep that in mind when you're trying to pass the eval account. Following this, let's do yeah, I just did the example on a 100K account, right? So it's 3% drawdown daily, 5% max drawdown, build a small buffer, 1 or 2%. So if you risk that, you won't go below your total balance, right? Because again, if you have a 5% max drawdown, that's from your original balance, right? So if you go below this, then yeah, you're screwed. But if you have a buffer of 1 to 2K, well, then guess what? You can risk these full amounts, right? Right now at 100K, if you risk one trade and you lose it, you're down below. So you could probably start risking about a 0.5%, get that buffer up to a 1 or a 2, depending on what you feel comfortable with, then risk that 1 or risk that 2%, right? Now let's keep moving forward. The risk to starting, like we just literally says 0.5% to 1%. Closing half and moving your stop loss to break even at a 1-to-1 risk to reward ratio. What does that mean? That means if you risk 1%, I would actually close full out of 1-to-1. Because why? Because if you close full out of 1-to-1 at 0.5%, then guess what? You just need one more trade to do that to be at 1% to gain that full percentage. If you're going to risk 1 full percent to start off the account with, close half, so that way you have a 0.5% buffer, and then you do it again, close half again, and you'll have 1% buffer. Now you can actually just close full at the next 1-to-1 or whatever you'd like to do. The whole purpose of this for this eval is to get enough of a buffer Where if you take three trades at 1 or 2%, it doesn't bring you back to your initial starting balance. But what it does, it helps you pass. The whole purpose of this is not blowing the account and passing the eval, protecting yourself and then passing the eval. So you want to create a small buffer, increase the risk, so that way you can pass the eval account. And remember, you're having strong systems, strong rules in place. So that way you're not going to blow the account, right? Not getting greedy, not being impatient, not over trading, sticking to the game plan, right? Now, if you have a minimum trading day, so for example, if you're on an eval account and you have three minimum trading days, close at a 1 to 1, right? Close at a 1 to 1. And then on the third day, you can then let them ride. Here's why. If you're going to just try to pass this on the second day or first day you get the account, and then you're like, oh, I just need to continue trading to pass the minimum trading days, this is where it gets really, really screwed up. Prop firms will know that. They will know, like, oh, this person's just getting in and out, breaking our rules. I kid you guys not. I will never forget this. I was eligible for a 30K payout all month long. I kept banking my trades, banking it, banking it, banking it, and I requested a withdrawal of $30,000. They denied it and breached my account because a month ago I was doing the minimum trading days, and they're like, "Oh no, you just got in and out too quickly, and it violated our rules." It was the most BS thing I've ever seen in my life. And prop firms will do that. So to avoid that, trade regularly through the 3 days, close at a 1 to 1, and then after the third day, start looking to risk the full amount, et cetera, et cetera. If you have the minimum trading days, right? If you don't worry about it. If you do, then do it that way because otherwise they will just say, oh, no, you didn't pass, right? Trust me, I've been there. It sucks. I mean, on a funded account, it sucks even more. But even on an eval account, you're like, damn, it's annoying. Trust me, just do things the right way. Don't try to circumvent the process. Don't try to outsmart them. They will not pay you out if you try to do anything cheeky or shady. Just trade 3 days normally, win or lose. And then obviously the 3 days have to be profitable days. They don't have to be in a row, but they have to be profitable days. Do that and then pass the eval the way you need to pass it, right? Pass all their rules before you actually just go ahead and try to pass it real quick, which 9 times out of 10, their only rule that's unconditional, meaning like compared to the total target that you need to hit, is the three minimum trading days, right? So that's very, very important to note there because I don't want it to happen to you because it happened to me one time. And then repeat until your eval is passed, right? And then once a funded account, your mindset shifts to passing, achieving things, et cetera, to what? Being in survival mode. You now need to be in survival mode to get a payout. The reason is because the markets are constantly changing, right? The markets are constantly changing. The markets are always, what's it called? Doing different things. So there could be a winning streak that happens, but then there also could be a losing streak that happens, right? So this is survival about getting a payout. I've had this happen where I passed like three eval accounts, crazy month, amazing month, and then the next week it was a new month actually. And then that first week it was just absolute crap. And I got faked out at every session and I lost the eval accounts that I just passed. It happens. You hit losing streaks. You can go on a winning streak for 2 months straight and then have one week where you lose every single trade, and that blows the account. And that is something that most traders will never tell you is the negative, whether they lost. I guys, I before I became a profitable trader, I spent over $30,000 on this trying to make it happen, and it finally paid out, as you saw the proof earlier, right? But the point I'm making is that one bad week can just have you lose your account, right? And that's the reality of prop firm trading. Is one bad week will blow your whole entire account, right? So that's why you need to build a buffer. Risk 0.5%, build a buffer, then scale past that buffer and request a payout, right? Because you want to survive whatever could happen. If you're risking 0.5% and you're building a buffer, then you go past that buffer and you request the difference of what your buffer is at. So if you have a 3% buffer and you scale to 8%, you request 5%, and then you get your payment back. you get everything else, and then you take some of that money, go buy another prop firm, and then keep repeating that process until you have four accounts risking at 1% per trade. Then you made it. But to get to that point, it takes a process, right? It takes a process. And with that money, you're going to want to fund your cash account. That's very important because like I just explained, you're going to potentially lose that account at some point, right? Or you put it into other investments like crypto, et cetera, et cetera. Have your money start working for you, right? And like I just said, the potential risk is everyone loses a prop firm account. Everyone. Your favorite guru trader has lost prop firm accounts, whether they want to admit it or not, because the markets won't always be in your favor. We do hit losing streaks. It's part of the trading journey. So the fact that we hit our losing streaks means everybody will lose a prop firm account at some point or time. Because let's say they continue trading, and they're one trade away from either getting back into profit or blowing the account. You take the same trade you do every day, it happens to lose. Well, guess what? Your account's blown now. It happens. It happens to everybody. Whoever says it doesn't happen to them is lying to you guys, right? So that is the potential risk, is that you could be trading on a 100K account, consistently getting 10K payouts every single month. And then that one week, 4 or 5 months down the line, guess what? You blow the account, you lose it, right? So that's why you want to keep putting your money into a cash account, keep putting it into a cash account, keep putting it into a cash account. So that way, if this ever does happen, then guess what? You're protected and you're not really trading from zero anymore. You're trading from an account that has enough money in it that can get you to the ultimate goal of the 1M, right? So let's keep moving forward. And yeah. Yep. So now we just went over risk management. Now we're going to go over strategy. Now, guys, strategy is literally like 10% of what you have to do. The other 90% is all above there. This is just the stuff that people love to hear. This is what gets people the views and things of that nature, right? There's a reason why this is so down far down here, because it's not that important. It's 10% of what you actually have to do. The other 90 is up there, right? We already went over the 90%. Do the 90%, you will get the cha-chings, right? You will get the monies. But do the focus only on this, you will be broker than a joker and you'll be sad, right? That's the reality. So let's dive into this. So first and foremost, pick one strategy. I use a variation of an open range breakout with support and resistance, right? This has me have a 79 to 81 percentage win rate with this strategy, depending on the month, right? It's between that average because some months are better than others, some months are not as great, but it's never below 79%. That I can promise you. Now, following this, how do I do that? Well, first and foremost, I want to mark off my major area of resistance and support and wait for a breakout on the 15 minutes. So for example, if this is what market looks like, here's my major area of resistance, here's my major area of support, and then pumps up, buy. But if it doesn't do that, right, and it goes, let's say it comes up and then comes back down, pushes below, sell. Simple as that, right? It's not rocket science. Pretty easy to follow. And then once it breaks out, like it just shows you, take the position. The stop loss must be in a good location. The reason why I'm not telling you exact, because that's something I reserve for my students, right? If you're going to follow the strategy, back test it, figure it out. It's not hard to figure out. But if you are somebody that is looking to get this information quicker, not back test it, click the link in the description, apply to see if we can help you out, and we'll take it from there, right? Quick little pit stop. Moving forward, at once you're in the trade, you're doing the trade, you're doing the strategy, you're going to want to close half, move stops to break even at a 1-to-1 always, and let the rest ride. That's what I do every single day. 1-to-1, close half, move stops to loss to break even, and I let the rest ride. And I close once I feel like I'm satisfied with the amount that I have. That is literally how I trade every single morning with my students live in front of them all the time. There's nothing that I have ever done that's not in front of them that is anything different. It's always the same. And here's one free tip: anticipate a pullback. So, meaning if we draw this here, right, and we happen to break to the downside, anticipate a pullback to retest where we broke out of. If we happen to go to the upside, retest and anticipate the retest where we broke out to continue up or to continue down or come back into the range. So, what does that mean? Close half at a 1-to-1 just in case that pullback happens pretty quickly, because you don't know if this pullback is going to be like super quick or go all the way down and then go up. We don't know when that pullback is going to happen, at what point of this continuation down. We don't know. So close half at a 1-to-1, move your stops to break even, secure some gains, and let the rest ride and see what happens. If it stops you out, guess what? You at least close 50% of your position and you made some money, right? That will always be forever in your favor. Don't try to be the hero and try to make a bajillion dollars and then post on Instagram and say you're the best trader ever. That's a load of horse shit. Whoever does that, do not listen to them because they don't know who the heck they're talking about. Be realistic, be honest, and just close at a 0.5%. I mean, close 50% of your position at 1-to-1, right? Really, really, really do that. I can't emphasize that. That's one free tip that I will give you guys here that I teach all my students to do. And it's one of the reasons why the majority of my traders are successful within 8 months and they're profitable, while other traders outside my community take 3 years to become profitable, right? They do it in they do it in 6 to 8 months. Pretty easy. Let's continue moving. The rest of the value information regarding to the strategy, I do reserve for my students because it is valuable and it will make you a crap ton of money and it will change your life. That is a guarantee. It will change your life. That is a guarantee. I'm not going to pitch you, but if you want to learn more about it, click the link below, apply, right? No harm in doing that. Let's move on. Where are we at? Strategy. So, like I said, if you stay to the very end and you're at this very end of the video, you're now going to want to see, all right, if I implemented 100% of everything I just said, all above here, this is what the results should look like, right? And again, to save time, so this video is not extraordinarily long, I just took this, I did the liberty in doing it and then took a screenshot. I'll even show you an Excel sheet. I'll have to stop sharing this screen, share another screen for the Excel sheet, but you'll see everything and you'll see how it will compound over time. So we're going to talk about the cash account first. If you have $25,000 and you did the exact process that I just laid out and you did that correctly with 25,000 in 2 years on a cash account, this is literally a compound calculator. You'll have close to $2 million. 20% monthly, $25,000, 2 years over basically over the amount of money that I personally made, right? Is I did it through prop firms. So you would actually have made way more than what I would have made if you've done 25 grand to start with. Now, how does that work? 25 grand, risking 2% per trade. You're going to target 20% a month, which is 5% a week. So if you can stop trading at 5% a week, target 20% a month consistently for the next 2 years, you will have this amount in your account. Let me repeat, it is guaranteed to have this amount in your account if you follow the process that I laid out above. Risk 2% per trade, aim 5% per session, I mean per week, and then 20% per month, and you stick to those parameters. In 2 years, you will have this amount. That is guaranteed, my friends. If you do something completely different, I have no idea what will happen. If you decide to say, "Oh, I'm going to risk 1% only, or 3%, or start with 20,000, or start with 50,000, or start with 10,000," then I have no idea what's going to happen because I did this off of a $25,000 investment, not a 50, not a 10, not a 5. $25,000 investment. If you do more, it will be more. If you do less, it will be less. Do the math, right? 20% for 2 years monthly, you will get this amount. Now, what about the prop firm side? Because many people are like, I don't have $25,000. That's all right. Not many people have that money laying around to put into an account. What about the prop firm side? If you do the prop firm side, let me zoom out a bit here. Yeah, right. If you do the prop firm side, 4 accounts at 100 grand per account, starting the funding of $400,000 because that's what that would look like, and your monthly gross assumption is 10%, with the trader split up 90%, 24 months, you're going to be making a decent amount of change. Look at that, $1.1 million, right? Now, that's what I want to show you. I want to show you that Excel page. So I'm going to stop sharing my screen real quick and I'm going to jump to that Excel page. So this is the Excel sheet I made to show you the math. So that way I'm not, so that way you don't think I'm just talking on my butt here. Even though that I did show you the proof that this will work and 100% will work if you follow the plan that I laid out, but also to show you, hey, this is what it looks like with a 100K prop firm challenge. So if you get four of those suckers, this is the total compound pay you'll get. This is the amount of fixed base you'll get, right? And this is a 1 month payout, $41,000, right? That's off of four trading accounts with an assumption of 11% growth on each, right? So what if I change this to, let's say, 50,000 instead? Right? You're gonna have instead this amount, to $200,000 with assumption growth of 11%. You're gonna get half a mil instead of one full mil. So this, and then you can see the numbers here change all throughout, right? As you can see. But what I'm talking about, based on everything I said, is going to be, oh wait, cancel that. We're gonna do 100 account, right? Four of those suckers, 400 grand. And this is what that looks like. So your starting balance at 400. This is including everybody, everyone, not everyone, all your prop firms and a copy trader, right? Gross profit 46K. You're going to withdraw 41,000, leaving 4 grand in there. So you have a buffer. Again, buffers are everywhere, right? And then you're going to continuously do that, continuously get the same amount of payout, leaving buffers in there. So that way, by leaving buffers in there, guess what, guys? You compound your prop firm challenge. And then you can compound your prop firm accounts all the way to this amount, right? And then start withdrawing some big numbers by leaving buffers in there. This is literally the math showing you how it needs to be done. Like, I'm a big believer that if you build something on an Excel sheet or build it on paper first, follow the game plan, it will come to fruition. If you decide to be crazy and withdraw the full 46K instead of the 41, not leaving where is it? $4,000 in the account, then that is on you deviating from the plan. That's no one else's fault. So you need to follow the plan that was presented, right? And if you follow the plan, you will get the results. Back to the board here now. All right. So now we just went over that. So next is this. Next steps. You have two different opportunities here. You can take the information I gave you, go apply it when it will work. Or you can learn more about FinTrade Master Academy and like, comment, and follow first and foremost, right? Before any of that, like, comment, follow. As you can tell, I'm not really a YouTube guy. I'm more of like a trading person. So yeah, like, comment, and follow. But if you want more help, no, like I said, support the channel, subscribe, like, comment something, and then go apply this on your own, right? If you do want help, then you can visit our website and apply to work with us here. So our website's FinTradeMasterAcademy.academy. You can apply to work with us at FinTradeMasterAcademy /apply. So let's Google those two together. So that way you know exactly what it looks like. FinTradeMasterAcademy.academy. Right? This is our website. You can look at everything and then just kind of look through it, get more information about us, right? See the live reviews. What else? More information about us, the student testimonials that we have. And if you click it, it takes you straight to our trust pilot. So just click one, takes you straight to our trust pilot, as you can see. And then why FinTrade exists, information about me, our team that we have that is growing, and what we offer, and things of that nature, right? But if you want to apply to work with us, then all you got to do is just /apply, watch this quick video, click apply now, and then fill out the information and then schedule a call with us, right? All right, guys. If you liked what you saw here, drop a like, follow, comment, and I'll see you in another video. Peace.